Hey, it's Scott Cooper with the One Group at Keller Williams Real Estate, and today I'm sitting down with Bruce Joseph. He's a mortgage professional and principal broker at Anthem Mortgage here in Barrie, and we're talking about the changes that came down the pipeline recently with mortgages in Canada. Hey Bruce, thanks for coming today.
Pleasure to be here.
Yeah, so 4 major changes. Some people are not sure what's going on, some people are a little fearful.
Right, so yes, 4 major changes just came into effect. I'll briefly go through all 4. The first one is a stress test for high ratio mortgages, and we've had a few weeks to wrap our heads around that. And that's just created a little bit more difficulty for the cusp of the market. The new home buyer that almost didn't qualify before has now been reduced in what they can borrow. But November 30th is the big one. That's where conventional mortgages are now going to be a little bit more challenging to obtain, and the cost structure, as we've already seen, may increase as well. The other 2 changes is a insurance premium that may be added to the banks when they decide to make a claim on losses with CMHC. And finally, when you sell your home, and this is a good one to talk to your accountant about, you have to report the disposition of the sale of your home.
Yeah, that's definitely a big one. We talked about that in another video. So if the banks are going to start to incur kind of a deductible on their insurance, they're likely to push those costs down on the consumer.
Absolutely. So that's more likely coming in near the beginning of 2017.
Okay.
Right now it's up for discussion, but the paper has been put out.
Right.
And it looks like, yes, absolutely, the cost will be pushed off to the consumer.
Right.
Banks are typically not going to sacrifice their profit margins.
No, definitely not. Yeah, the banks are definitely not going to do that. So it's not necessarily doom and gloom with all these changes. People don't really have anything to be fearful of. It just sounds like mortgages are going to just get a little bit more expensive, and the people that are on the borderline of being able to get a mortgage are going to feel the squeeze.
I think it's important to understand that real estate markets historically haven't corrected due to government regulatory changes. It's usually some other element. And the idea here is to be financially prudent. The government isn't looking to crush the market. They're simply looking to create sustainable increases in home prices. And as we've seen in Vancouver and Toronto in the last year, those type of increases aren't good for the vast majority of people.
Right.
It's not affordable. So I don't think there's a reason to get terrified if you understand why the government's doing this.
Right. Yeah, for sure. I mean, we've seen these huge increases in sale prices in Vancouver, Toronto. We're feeling them in Barrie this year too. Like a lot of people having a hard time buying a home. They're getting competing offers, that kind of stuff, and they wonder if it's sustainable. And they wonder, kind of, is there gonna be a bubble? Are interest rates gonna fly up like they did back in the '80s? And there's a lot of fear around that.
Right.
We had someone comment on one of our Facebook posts, and they were very fearful about this. So it must be the vibe out there with the consumers. How do you sort of see it from the mortgage end? How do you see the conditions?
Right, so you mentioned interest rates, and that's always a fascinating topic to discuss. So I think it's important to differentiate the cost of mortgages for banks. That no doubt will rise, and the media will be presenting that over the next couple of months. You'll see all other banks start to increase their costs, and so the end borrower will be paying more on various different types of mortgages. But the central bank, on the other hand, that controls interest rates, is signaling a decrease in interest rates.
Wow.
So that's not to be confused with mortgage rates, even though the 2 are correlated. So this can seem very confusing,
I can see that.
and it'll be interesting to see how it plays out over the next few months. It could be close to a wash, but ultimately, I think in the end, we're going to see bank profits remain marginally the same. They may fall with less mortgage volumes, but the consumer is going to have to find professionals that can explain this to them really well, and how it's going to affect their mortgage.
Absolutely, yeah. And it's, more and more people are reaching out to mortgage brokers over the big banks because there is some more options and that you're working for them more so, right? And I think that's been a trend.
Well, we have a more alignment with their interest. There is bigger options, and I think the big win with mortgage brokers is we use financial institutions that are provincially regulated as well as federally regulated, like the Big Five.
Right.
And with provincially regulated institutions, we're able to keep the costs really low, just like big banks, but we're able to get larger loan amounts, especially for self-employed borrowers. There's no question.
Great, yeah.
We've exceeded with that market over the banks for the last few years.
Great,
Absolutely.
fantastic. Well, thanks for explaining that today. And if you have any questions about mortgages in general, get a hold of Bruce at, what's your website?
AnthemMortgage.ca.
Perfect. Thanks again, and hope to talk to you soon. Cheers.